From the national headquarters of RT America in our nation's capital, hello again, everybody. I'm Rick Sanchez. We're now getting the full picture of what happened to our economy in the month of December. And what comes to mind for most economists who are talking about this are words like rout, as in defeat or retreat. In fact, most of them are saying that with the exception of the late advance that we reported to you toward the end of the year, it was historically bad. Let me give you the headline. It was the worst December for the S&P 500 since 1931. You literally could not turn on your TV during December without hearing the catchword for the season, which was volatility.
After days of historic declines, the Dow closed up nearly 1,100 points yesterday, the largest single-day point gain. The Dow is moving back towards the lows of the day. All 30 Dow stocks are now in the red, and the Dow's gains for the year are gone. A distant memory.
It was another roller coaster day on Wall Street. Following yesterday's 1,000-point surge, stocks plummeted as much as 600 points today. Then they came roaring back.
News on Wall Street, which is giving investors a major case of whiplash. The market's plunging again today. What the heck is going on?
What the heck is going on? So now, as we embark on a new year, we have to ask ourselves a series of questions. For example, what happens with countries who are deciding they no longer want to use the dollar as their standard? Also, what happens if the Fed continues to raise interest rates? What happens to the debt that's been accrued by millions of Americans who, for the last 9 years, have been on a buying spree because it seemed to them that money was just so damn cheap? And then finally, with all the heat on the U.S.-Russia relations, U.S.-China relations, and Saudi Arabia seeming to want to act the fool, what happens to our economy if there's a global military conflict? It is with these questions that we kick off our first newscast of 2019. I'm Rick Sanchez. This is RT America, where we believe it is time to do news again. Let's do this. We're going to begin, obviously, with this question of what next for the U.S. economy. It seemed for a while there like everything was up and up and up, right? And now it's more like what could possibly happen next. Let me visualize this volatility for you. First of all, there is talk that countries like China and Russia and Turkey and India are looking to dump the dollar. And then there's the S&P 500, which experienced its worst December rout since 1931. Then stocks all over the world started limping, literally limping to a finish in places especially like Japan and Germany. Europe's main stock, its gauge fell by 13%. The 10-year Treasury yield slid 2.68%. That was the lowest since February of that year. And in commodities, crude showed its first loss since 2015. So what was up? Gold. Gold finished the year on a 6-month high, which is usually, as most of you know, a sure sign that investors don't trust the market conditions, so they do gold as a hedge. So with all of that said, what I want to do now is bring in somebody who knows a lot about this and can help us try and make sense of it. Bart Chilton was the commissioner for the U.S. commodity futures trading from 2007 to 2014. He's also the host of Boom Bust here on RT America, and he joins us now to try and make sense of this volatility. Bart, I'm so glad you're here. Let me start with this. What happened? What happened last year?
Well, there was a huge rout, as you say, Rick, and 2017 was really a sugar high based upon the bet that we were going to get tax reform, which they did at the very end of 2017. So there was a lot of sort of sugar high that was going through 2018, the beginning, and then things sort of went to crap in a hurry and ended up all over the world, as you say. I mean, not just the U.S. If you talk about China, 31% down in markets. That's in Shanghai and Shenzhen, the big ones, Hong Kong, the Hang Seng over there, Australia, South Africa, India, France, Germany, London, Colombia, Toronto, globally all over. About one of the only few places it was good was actually Brazil. Other than that, not many markets did well last year, and the U.S. really took it on the chin.
Well, was it all about trepidation? Was it about Trump's bravado? Was it about fears of this trade war? Was it about Saudi Arabia? What was it?
All of the above and more, including the increase in interest rates by the U.S. Federal Reserve. The economy was sort of moving forward. A lot of the economic indicators, growth was good. And so the Fed started raising interest rates by 1/4 of a point at a time. They did so 3 times, and that slowed down growth.
And they had to do that, right? I mean, at some point, it has to go up.
You have to do it. You can't have, I mean, the president says he wants interest rates low, but he comes from a real estate developer. I mean, anybody that looks at the economy knows that you can't just have like 0% interest rates forever. So all those things went into it, and I think the big kicker going forward is going to be looking at these trade problems. Lots of tensions, and it could be a terrible problem for markets.
There's something going on that a lot of people are talking about it, and we, you know, guys like you understand this better than the rest of us. So I guess I want to gauge from you how serious this is. There's a lot of talk that countries like India, even China, Russia, and of course some of the countries that are less apt to be our enemies are obviously wanting to do something like this, but that is almost either casually or totally separating themselves from our currency, the dollar, as a standard. What is your take on that?
Well, I mean, it used to be the pound, right? Everybody used to, the currency of the globe used to be the pound sterling from Britain, and then it became the U.S. dollar. And when there's anxiety and frustration with a certain nation, and there's been a lot with the U.S. in the last couple of years, people are saying, screw the U.S., we want to delink. And some of them will decide to do their own business in a denomination of their choosing, not the U.S. dollar, between themselves.
Yeah.
But for the short term, actually for the longer term, I think, the U.S. dollar is going to be the benchmark. It's going to be the standards. International agreements are going to be written with the dollar in mind. So I think it's more a sort of a release of pent-up frustration against a more isolationist U.S., is what I think.
So in other words, Donald Trump goes around saying America first, and they're saying, oh yeah, America first, fine.
Yeah, not so fast.
Not so fast. Here's how we're going to fight back against you. We're going to devalue the dollar.
Yeah.
So it's bluster, you think?
I think it's mainly bluster.
They're not going to do it.
They're not going to do it. They may do it between themselves. So you might have Russia and China do it together back and forth, but you're not going to have the whole world. You're not going to have India and everybody separate from using the dollar. Now, will it be like that in 30 years? Maybe not, but for the near future, sure.
Let me ask you a final question. Everybody seems to be talking about this recession thing. There's a recession coming end of 2019, that's this year, or beginning of 2020. It's got a lot of people spooked, and I'm hearing in the market, I'm hearing a lot of my friends talk about them holding back on some things. What's your forecast this early in the year?
Yeah, you do one trading day does not make the whole year.
Of course.
But we watch these things on a daily basis. So, you know, tomorrow we'll be watching manufacturing numbers. On Friday, we'll be watching Jay Powell, the Fed chair, to see what he says. We'll be watching the jobs reports on Friday. And then going forward next week, the beginning of these negotiations with China will begin. The week after that, the Q4 earnings reports will come out. So that's the short term. The longer term, I think these trade tensions are going to be a big deal. I mean, whether or not we're going to have a procrastinated trade war, that's a huge deal and a huge blow to our economy. And I think the real numbers that matter, if people just tune in and look about finance once in a while, look to April when we get the first quarter earnings reports. See how companies are doing then, once this trade war has been in full-fledged manner for a long time.
Commissioner Bart Chilton, what a pleasure, what a delight. You're the
Great to be
perfect
with
guest.
you.
Hey YouTube, thanks for checking out our channel. We hope you enjoyed the video. We have tons of content for you just like this. For more of RT America's one-of-a-kind news and analysis, be sure to subscribe and never stop questioning more.